Hello, everyone, and welcome to Volume 29 of the Bellringer. I'm Stacey Mankoff, Managing Principal of the Mankoff Company and producer of these After the Bell producer of the After the Bell events and producer of our Bellringer series. And tonight we're happy to introduce Bryan Courchesne, who's going to speak with us about investing in financial innovation. And again, this is our Bellringer number 29, which is pretty amazing since we started this in the midst of a pandemic, and now we're in much better shape. Before we get started, I want to tell you a little bit about Bryan. He is the founder of Newport Beach-based Digital Asset Investment Management, and he is no stranger to managing risk and being on the forefront of innovation. Bryan was impacted by the housing meltdown during the Great Recession, and this Florida entrepreneur relocated to New York City to trade options in the pit of the exchange. Within a few years, he was managing a desk of brokers as the head of equity derivative sales as a broker-dealer. During that time, he became an options principal and general securities principal. And then in 2018, Bryan worked with regulators to create DAIM as the first of its kind registered investment advisor for digital assets. As the CEO of DAIM, he and his team advise and manage digital asset positions for individuals and corporations. And Bryan, I see you left New York for California, so welcome.
Welcome. Thank you for that nice intro. That was well done. Very nice. I had a flashback of all those things in my head go by and spending my first day on the New York Stock Exchange.
I can imagine, and I'm sure you're not missing the cold weather here in New York. So you really, I guess your next step would be somewhere in Texas if you're going to do all the points on the United States.
Yeah, that's funny. That's kind of funny. We do look at maybe having a branch office there in Dallas. So it could be in the future. I'd like to have a presence in New York, California. Here we're at Newport Beach, maybe Dallas, and then Florida. It'd be great. The 4 points to cover would be really awesome.
I think those were all important areas. And I guess based on your background and what we've been talking about, tell me why you're bullish on investing in this area. Obviously, it's been an interesting ride the past couple of months.
Yeah, and we're going to get into like some of the investment properties and cases here later on in this, and I can't wait to share that with you. But really, a lot of the same factors that got me into this business in 2014 continue to still be true now. And really, it's the alternative investment that really draws me to it. And this space, digital assets, Bitcoin in particular, you have assets that have true fixed supply, right? Completely decentralized. They trade 365 24/7, right? Around the world. It's a global asset accepted by everybody. So you have something that's unique and liquid that you can get in and out of that also has the ability for great returns. Some say high volatility is not only to the downside, but it's also to the upside. And when you look at these and adding Bitcoin and other digital assets to a portfolio over the long run, and we did this study even through the end of December with the downturns last year, it really improves the risk-adjusted returns of a portfolio, even still with the drawdowns.
Okay. Well, as a registered investment advisor and speaking as the daughter of a registered investment advisor, what is the most important step you need to take before investing in the cryptoverse?
Yeah. So I would say it's sizing up the notional amount that you're going to deploy into digital assets, the cryptoverse. Some people go too big, and actually some people go too small. Now, going too big is usually easy to determine. And when you're about to press the button or to wire the money, your stomach starts to get uneasy. If that's the case, you should really be stepping back and talking to an advisor. But there's also people that have the ability to actually invest more, and they might be under allocated to where it just won't have an impact in their account later on, when these things realize higher valuations. So it's looking at sizing up the notional on both sides. And then I'd say it's secondary to that is obviously like, look who you're doing business with and what platform you're going on. Seek help if you can. We're here to help people. We'll talk to anybody and help them out.
So it's also really assessing risk. To how much risk do you feel comfortable?
Your dollar value out of your entire makeup of investable assets. So you have stocks, bonds, real estate, cash. How much is allocated to it? That 2 to 7.5%, 2.5 to 7.5%. Like that should be good, right? You should feel comfortable with that. Don't try to allocate over, don't go under. Look, if you're younger and you're going to be changing jobs and your career path's accelerating and your income's accelerating, you can add more to that risk level. But yeah, that's totally it. It's risk. And then you have two parts to risk: your personal risk on your notional, and then your counterparty risk. A lot of that got cleaned out, and that's what caused prices to go down last year. But there's still great platforms that are in business today, will continue to be in today. And we think that the shakeout's actually done from that standpoint as well.
Well, that leads very nicely into my next question, which is, what are the hot areas for investment now in this?
Yeah. So I can tell you, like just the last week, it's not necessarily just a particular asset like in cryptocurrencies or NFTs, but it's about taking advantage of future taxes. So it's, what do we do with like account types? And people want to minimize taxes now or in the future. So they look at IRAs, and we're getting close to the tax deadline. So making contributions for 2022 can still be done, even though we're in calendar year 2023. So an eligible employee with earned income can put $6,000 to work in the market now. And that's what we're seeing is like that's kind of the, the hot stuff right now is, okay, the assets are kind of all down. They're at better valuations. Let me do this in an account where when they appreciate in the future, I'm going to have less of a tax impact. So that's kind of the hot thing in investing right now.
Okay. So that's right now. What opportunities do you see in the near future and then in the far future?
Yeah. So in the near future, what we see is, people getting their heads wrapped around these low prices. So we did a study. You got to look at Bitcoin because it just has the largest macro cap for the whole digital asset space. The average duration in the peak to trough of the cycles, so going from the all-time high down to the trough, looking at back cycles, is an average of 400 days. We're past that now. We're over 430. So what we think in the near term future is getting people to wrap their heads around these low prices are not going to last much longer, right? So average in here, Bitcoin now is $20,000 cheaper than it was this time last year. So your same dollars getting you twice as many units. And that's the way people should be looking at this. All the negative headlines are going to help push prices maybe down a little bit more in the short term. They're not going to last there forever. So positioning yourself here in the short term, digital assets that you like, different things that will be around Ethereum, Solana, Bitcoin, like the staples are good. Be very, very careful on the bottom end. Things that have been down 95%, they need so many more multiples just to get back up to par. So careful on the bottom end range. So again, near term, really helping investors look at, this is the trough zone. This is the accumulation range. We might go lower, stick with it because it won't last much longer. Now you said the far future.
So before we get on to that, I want to ask you, because there's obviously been a lot in the press about legislation, regulation, and such like that. How is that impacting investment right now, this uncertainty?
Yeah, so for us, we've been licensed to do this, and we get multiple audits a year, it feels like. Some years 2, some years 1. So we're very familiar with the regulatory landscape, whether it be someone from the SEC or the Department of Labor. We answer these questions on a regular basis. It's just something that we expect. So actually, from our standpoint, regulation is pretty clear to us. We have our clear on-ramps to get in from cash into a digital asset exchange. And then we know what we need to do to report qualifications. So we have a qualified, properly licensed custodian. We operate as a registered investment advisor. So from those standpoints, we treat everything under the highest scrutiny, whether they say that they're a commodity or they say that they're a security. We're protected under this umbrella, and we operate as if already. So our clients that are with us, we give them that reassurance. Now, on the outside, when you have maybe just a money transmitter license, like some exchanges that went under, last year, well, you're providing more of a money transmit service. You're actually facilitating transactions more like a broker dealer. So, will these companies that are in existence now and going forward have to roll into more stringent licensing? Most likely, but that's for more of the benefit for users and investors. And I think that will be the pivot point when you see large exchanges, take this stance and say, okay, this is beyond being a custodian. Maybe we have a broker dealer license. that will reassure investors again and drive dollars back to the space.
So you would recommend, obviously, if you're getting into this, to have somebody like your organization, which follow I guess the TradFi, traditional financial regulations of registered investment advisor, that gives a layer of trust that you have than if going to an FTX, or what was FTX.
Right. Yeah, that's correct. Because not only that is you're not investing by yourself. When you put an app on your phone and you move that money there, you're not getting a phone number either, right? Like, you're lucky if you could do an email and get somebody to respond and help you, because when there's trouble in the waters, nobody's emails are getting answered. When you have a firm like ours, managing your assets, we have human reps at the companies that we do business with, also in the crypto sphere, right? So when we need help and we need to do things, or we just need communication, they're there for us. In fact, Gemini is one of our main business partners. We have multiple reps assigned to our account to help us manage all of our clients. And we talk to them almost on a daily basis, if not multiple times a day, as humans. And then you have not only us, if it's an IRA, we have a separate IRA custodian. So at some point, individual accounts could have 3 to 4 individual companies looking after the safety of those accounts.
Okay, that's very reassuring for an investor.
It should be.
Yes. So what now? Give me the 5-year, 10-year down the road look. How do you envision the landscape being?
Yeah, the excitement, it seems to be in a story that's just starting to develop, and this all just kind of popped up in January, is Bitcoin ordinals, right? So now you have the largest market cap asset that can have NFTs on it, and this can start to replicate things that were done ERC20, right? So that doesn't mean that these other smart contract platforms are going to go away. It's just more of a complement to the space, showing that all can get done. And as these use cases start to, show something that's more tangible for people to use on a daily basis, that's going to be the big adoption, and what we feel could be the next big story. Of course, it could be the next halving in Bitcoin that comes, that you hear. That's broad information and readily available, and it seems to have worked in the cycles, but you need more than that. People need to be excited about investing in digital assets. And we're seeing a little bit of an emergence of that. Yuga Labs raised, I think, almost like $450 million last year to work in the NFT space. The other side project is now having a new journey that's going to happen, and I think it's next week or something. There's starting to be interest in this again, right? And it's going to be running on the Ape coin. So there's a little bit of a buzz coming around this stuff, and using and having Bitcoin with the ordinals might help on the broader spectrum lift the macro side of the space, and then help everything in the community behind it, which would be really great to see.
So there's a lot of there's so many tokens now, or tokenization and all that, and you can tokenize almost everything from your surfboard back there to your
I tokenize shares of this company on the Bitcoin blockchain.
Okay. So do you see that as a growing area? More everything will be tokenized, or will there be a sort of a rendering of what is really profitable to do that?
Yeah, I was just talking to Gemini on Tuesday, our rep there, about tokenizing money market funds. And it's just that stuff. It's so in demand. $50 billion moved into money markets last month, and the banking relationships are inherently there. Gemini uses multiple banking relationships. That those money markets should be just there, and then just putting a wrapper on them and having them be tangible and liquid is just so close. And I think with what I said earlier about the regulatory uncertainty coming, where these exchanges will maybe have to apply and enact and lean on a greater license. I mean, Gemini already has a broker dealer, so if they have to lean on that as being the primary license instead of the custodian, then this is the next extension, where if they get that done, and then they get a wrapped money market, that's almost the full suite of regulations that everybody wants to see. There's not much more beyond that besides reporting, and that will push a lot more assets into the space. And now when you get more pure cash coming into the space, and it might just use wrapped money market, tokenized assets. Well, when rates go down in the long term, they eventually might come down and there might be quantitative easing. Well, you're not going to, those are going to yield less. And then you're going to want to roll out to another asset, most likely a hard asset, fixed supply digital assets. Well, you're already in the blockchain space. It's going to be an easy conversion to go from a wrapped money market fund into something like Bitcoin, Ethereum, Solana, because you're in that ecosystem.
Well, this is all fascinating, and there's so much to learn all about it. And promotional, Bryan will be speaking at our panel that we will be holding in Newport Beach on the 28th of March. So Southern California, here we come. And I thank you, Bryan, for your information and your sharing this. And I'm looking forward to seeing you at the end of this month.
Yeah, and we're going to share a whole lot more opportunities on investing in the space. Join us. We're looking forward to seeing you. That's March 28th here in Newport. It's going to be great.
Terrific. Thank you all. And we look forward to seeing you at the next Bellringer. Have a good night. Bye-bye.